In this first market update for 2024, we're going to be taking a look at the SPX or S&P 500 and also the NDX or Nasdaq and considering what we are expecting of the year ahead. So here is our analysis of the SPX. This is a monthly chart, and we looked at this chart in the final market update for 2023. Just a reminder of what we have on this chart. This trough in December of 2018 was a trough of fairly high magnitude, in my opinion. It was probably a trough of the 9-year cycle. The March 2020 trough, as you can see over here, was then only a trough of the 18-month cycle. You might wonder why that is, seeing as it was a deeper trough. In other words, price went lower, and I think that is because of fundamental interaction, a term that Hurst coined for when news events distort or amplify the price movement. And of course, that was what I have referred to as the pandemic trough. That is when the pandemic was sweeping around the world. And so, in my opinion, it is likely that that was a trough of only 18-month magnitude. The trough that then formed in October of 2022 was, of course, a 54-month cycle trough. I would like to point out this 9-year semicircle. These semicircles are very useful for understanding what the cycle influence is, if you like. They could be treated a little bit like vectors. So when the semicircle is moving upwards, that cycle is applying an upwards force to price. And when that cycle is moving downwards, it is, of course, applying a downwards force to price. The obvious thing that immediately occurs when considering this analysis is that the 9-year cycle is in the process of turning down. That means that the 9-year cycle is forming a peak in the market. Now, cycles, of course, cause markets to form M shapes. And here is the very obvious beginning of that M shape. We are now reaching up to the second peak of the M shape, or the second peak of the 9-year cycle. You will notice that, of course, we have a very important level that we are approaching. That is a price level that is likely to provide some resistance. It's an obvious resistance level. When we take a look at the Nasdaq in a moment, you will see that the Nasdaq has in fact slightly exceeded that level, but this general area is an important area to watch because of the potential for resistance forming here. Now, as a cycle analyst, we are constantly looking for these M shapes in our charts, and the obvious possibility is that price is now forming the second peak of the 9-year cycle, and it is then going to turn down. That would provide us with a perfectly balanced and symmetrical M shape for this 9-year cycle. And that is why there are some cycle analysts out there who are warning that the markets are about to turn bearish. But are they? Because there is another possible form that this M shape could take. The first thing I'd like to do is to drag the top of this chart down. There's a subconscious thing that tends to happen when we look at charts and we imagine that the top of the chart, for some reason, forms some kind of resistance to price action. Obviously, the top of a chart is usually governed by previous price highs, and so generally speaking, there is some form of resistance towards the top of a chart, but we need to be wary of the subconscious implication that the top of the chart is as high as price can go. That is not necessarily true. Another form that this M shape for the 9-year cycle could take is to be distorted to the upside. In other words, it is quite possible that this 9-year cycle is going to turn out to be a bullish 9-year cycle. That would be the case if this trough in December of 2018 was not just of 9-year magnitude, but was perhaps a longer cycle, and the longer cycle in our nominal model is the 18-year cycle, the longest cycle that Hurst ever spoke about, to my knowledge. Is it possible that that December 2018 trough was a trough of the 18-year cycle? It is possible. We would need to zoom out and take a look at a much longer perspective in order to start answering that question. But I'm not going to spend time in today's video doing that, because the purpose of these market update videos is not so much to make very long-term calls like that, but to guide us in terms of what we should do monitoring price action on a weekly basis, rather than making decisions about that 18-year cycle. But I do raise the possibility, because it is quite possible that the 9-year cycle is then going to form a much later peak. And you can see this is a very approximate M shape that I've drawn on this chart, but you can see that this M shape implies a peak occurring only in 2025. So where are we right now in this roadmap? Well, here you can see the nest of lows for the 18-month cycle. We've been discussing this for some time. It is centered around the first few months of this year. I think about March is where the nest of lows is actually centered. However, the strong move that the markets have made out of the October 2023 trough raises the question, as I did discuss in market updates at the end of last year, as to whether that 18-month cycle trough could possibly have come in early. It would be very early, and it does seem unlikely. But I should point out that if the market is bullish, and it clearly is bullish, if the market has a bullish underlying trend, and that is a genuine underlying trend, and we have no reason to suppose that it isn't yet, we haven't seen any signs of bearishness. And so if we have a genuine bullish underlying trend, then it is not unusual for cycle troughs to occur early. Now, I do think it is worth reminding you that even though we are looking at a bullish market at the moment, and as I have just mentioned, there are no signs of bearishness just yet, we do have this next 9-year cycle trough looming towards the end of 2026. And at some point, the bearish influence of this 9-year cycle is going to kick in. And so on a much longer term perspective, we are aware of the fact that the markets should turn bearish. Before we zoom in, let's quickly take a look at this monthly chart in the Nasdaq. Here it is, and I will just adjust this chart as well in the Nasdaq so that we do not subconsciously assume that the top of the chart is the limit of potential price action. You can see there are very few differences in terms of the analysis on this chart. The one thing that I think is worth pointing out is the fact that this December 2018 trough was, of course, at a lower level than the March 2020 trough or the pandemic trough, increasing the chances, in my opinion, that this December 2018 trough was the more important trough of the two. We again have a 54-month cycle trough that formed in the Nasdaq in October of 2022, and we have our nest of lows for the 18-month cycle trough, which is occurring a little earlier in the Nasdaq in January of this year, in other words, round about now. Taking a look at this analysis on the monthly chart, if we have a trough that is expected to occur now, or on this bar, then this trough that occurred in October of 2022 seems a very likely candidate for that trough, considering the fairly strong bullish price action we've had as price bounces out of that trough. Here again, the Nasdaq is etching out a very elegant M shape, and here again we are reaching up for the second peak of the current 9-year cycle. So we need to stay on our toes, but of course the markets have been bullish, and until there are signs of bearishness developing in the market, we need to remain bullish, but keep our wits about us. Let's zoom in. We'll start first of all with a closer look at the Nasdaq. Here we have a daily chart from the 54-month cycle trough in October of 2022. There are some interesting things to note about this analysis. In particular, the 40-week cycle trough is positioned over here in June, under this rather insubstantial cycle trough in price. The trough that occurred in October of last year has been phased as a trough of the 20-week cycle. You will know from watching market updates in the last few months of last year that this provides a bit of an anomaly in the analysis. How is it possible that a 40-week cycle trough was such an insignificant cycle trough, whereas the 20-week cycle trough was so much more prominent in price action? What is it as a matter of interest that makes a cycle trough prominent? Well, of course, the strong bounce out of that trough trough makes the trough obviously prominent from a visual perspective. And cycle analysis is actually a very visual approach, at least the way in which Hurst described the analysis process in his Cycles course published in 1970. So how do we resolve this? There are different approaches, and some analysts will work very hard to convince the software, if they're working with software, to position a different magnitude cycle trough over here, perhaps. I tend to choose an approach where I let the software do its thing, and I accept that there are some imperfections in the analysis. I focus instead on what I do know. So what could be happening with this end of October trough? I've already mentioned that it could, of course, be an early 18-month cycle trough. Note the whisker for this 18-month cycle circle and whiskers. The circle is, of course, when we expect the 18-month cycle trough to occur. The whiskers are the lines to each side of that circle, which represent a reasonable range of time in which that cycle trough could occur. You will notice that this whisker does in fact reach over to just before that trough in October of last year. And so it is reasonable or possible that that 18-month cycle trough occurred there, even though it would have been a very early cycle trough. Instead of getting myself into a terrible tangle with the analysis, I choose instead to focus on what I call my level of confidence. I think it is possible that this could be an 18-month cycle trough, but it is certainly a trough of at least 20-week magnitude. And so what I choose to do is hide cycles longer than my level of confidence. Let me do that. Here we have an analysis where I have hidden everything longer than the 20-week cycle. I can say with some confidence that I think that all of these 20-week cycle troughs are indeed 20-week cycle troughs. And having made that assumption, I can then focus in more detail on what is happening now. So let's zoom in again on this chart. And we can see that at this scale, the analysis is making a lot of sense. We have our trough in October of last year, which is of at least 20-week magnitude. Keep in the back of your mind, it could have been an 18-month cycle trough. Then we had a strong bullish move out of that cycle trough, then a drop down into the 40-day cycle trough, which occurred at the beginning of December. Then we had the next move up, and then a stronger move down into this 80-day cycle trough, which formed in the first few days of January. We are now witnessing price bouncing out of this 80-day cycle trough. Notice the very clean M shape that formed. It is, of course, a bullish M shape, which means that this 80-day cycle that played out from October of 2023 to the beginning of January this year is clearly a bullish 80-day cycle. If we display our semicircles, we can see that the 20-week cycle has now started to turn down. We are going to expect another M shape to play out. Price needs to form a 40-day cycle trough over here in about the first week of February. Then it'll rise up to a second peak and then come down into a 20-week cycle trough that is expected in the beginning of March. Now, I've drawn a neutral shaped M shape. We don't know yet whether that is going to be neutral. But what we will do is monitor very carefully the way in which price interacts with my favorite tool, the FLD, or future line of demarcation, to monitor the state of the market. Note how the recent bullishness of the market is clearly reflected in the interactions between price and this FLD, with price achieving and then exceeding this first target when price crossed above the FLD in an A category interaction. The BC category interaction occurred way above the FLD, another indication of the bullishness present in the market. The D and then E category interactions had price hardly even breaking below the level of the FLD. Again, we were clearly in the grips of a strong bullish market. This F category interaction did run down and achieve its target, and it also exceeded it as price came down into the 80-day cycle trough. That's the first indication that we've had of any bearishness in this market since October of last year. Price has now crossed above the 20-day FLD in the new 80-day cycle A category interaction. Interestingly, its target is up here and has not yet been achieved. We will be watching with great interest. If price fails to reach that target and then turn down, we will assume that the 20-week cycle, which is of course beginning to influence price in a bearish manner, has kicked in and started to take effect. Let's take a look at our SPX chart. Here too we have the same anomalies with this analysis, with the 40-week cycle trough phased in June and this trough over here phased as a 20-week cycle trough. Interestingly, the whisker for the 18-month cycle doesn't reach over to this trough over here, which makes it a little harder to accept that that is the 18-month cycle trough. However, the principle of commonality tells us that different markets move with a great deal in common. And if we accept that the 18-month cycle trough has formed in the Nasdaq, we will need to accept it in the SPX. However, again, I will simply hide the cycles longer than my level of confidence so that we don't need to resolve that question just yet. Here we are looking at an analysis that makes a lot more sense, in my opinion. We can zoom in and consider the price action from October of last year. Again, we have a very clean bullish cycle action. And here is our 20-day FLD with the same very bullish interactions that have occurred between price and that FLD. Price has recently crossed above the 20-day FLD, generating a target over here just below 4,900, a level that has not yet been reached. The important moments to look out for are this 20-day cycle trough expected in about a week's time. Then, of course, we have the 40-day cycle trough expected in early February, and then the 20-week cycle trough that is expected to form in March. It is going to be interesting to see whether the 20-week cycle is going to actually start influencing price. Let me quickly display the semicircle for that cycle. There it is, and as I mentioned, my level of confidence in this analysis is certainly at the 20-week level, indicating that of course the 20-week cycle must be in the process of turning down and influencing price to move down into this 20-week cycle trough. Given the recent bullishness of the price action, this 20-week cycle might not have much influence because clearly there are other cycles that are influencing the price to move up. And so over the next few weeks, we're going to be watching with interest to see how much power this 20-week cycle really has. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below our video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.